So you're looking at a balance sheet and it feels like someone handed you a tax code in Sanskrit, right? I get it, but here's the truth. Reading a financial statement isn't magic. It's just learning to ask 3 simple questions. Okay, so financial statements are basically the story of where a company's money came from, where it went, and what they own right now. That's it. Everything else is just details. Let me start with the balance sheet because it's the foundation. The balance sheet answers one question. What's the snapshot of this business worth on a specific date? There are 3 buckets. Assets, which is stuff the company owns. Liabilities, which is stuff they owe. And equity, which is what's left if you sold everything and paid off the debts. That's the assets minus liabilities equation. Here's what most people miss. The balance sheet is just a moment in time. It's like taking a photo. It doesn't tell you what happened yesterday or what will happen next month. It's just Friday at 5 p.m. or whenever it was prepared. Now the income statement. This is where the action is. This tells you whether the business made money or lost money over a specific period. You've got revenue coming in at the top. Then you subtract all the expenses. Whatever's left is profit or loss. Simple. The thing nobody warns you about, revenue doesn't mean cash. A company can show revenue but not have actually received the money yet. That's why the next statement matters. Cash flow statement. This is the one that tells you the real story. Because at the end of the day, you can't pay your bills with profit. You need actual cash. I've seen profitable companies fail because they ran out of money. That happens way more than you'd think. The cash flow statement has 3 sections. Operating cash flow, which is what the actual business made. Investing cash flow, which is money they spent on assets and equipment. Financing cash flow, which is money from loans or investors or dividends they paid out. Here's my advice. When you look at a financial statement, don't get overwhelmed by the numbers. Start with the trends. Is revenue going up or down? Are they spending less than they're making? Is cash increasing or running dry? Those are the real questions. And this is important. Context matters. A small business and a Fortune 500 company are going to look totally different. An established company and a startup won't be comparable. And you need to know what you're looking at before you judge it. The whole point of a financial statement is to tell you if a business is healthy. Is it making money? Can it pay its obligations? Does it have room to grow? Once you stop thinking of these as documents and start thinking of them as stories about money, they make a lot more sense. Don't worry if you have to read them a couple times. Even people who do this for a living look things up. The fact that you're trying to understand it puts you ahead of most people.